Hello everyone and welcome to Project Trade. This is the trading highlights show, all of the magical, mystical, magnificent moments from our testing of trading strategies. We're on the case of a technical strategy in this one and we'll be looking for an overextension of price which leads to a reversal in price. It has pushed too far and thus must return some. Two indicators are leading the onslaught, tried and tested by someone somewhere as great indicators that will almost certainly work out as indicators often do not. We've got the linear weighted moving average initialized as the LWMA. There it is on the chart. You can tell by the picture, if you couldn't tell by the name, that this is a moving average. It's averaging out price from the amount of periods that you're looking back at, plotting that value on the chart and then connecting those dots between each period. The linear weighted average is a pretty fast responder to price movements relative to other moving averages, that is. So to defeat the purpose of it, we're going to slow it right down by using 150 periods. That's a lot of periods. Our second indicator, which you couldn't have possibly guessed unless you are one of those people that reads the video title before clicking. It's the on balance volume indicator. There it is beneath the price chart, a good old-fashioned oscillator. There's no fixed scale to it as the OBV value is relative to the asset that it's being applied to. Simply put on what it do, the volume amount from a period is added to the OBV value if price finished higher than the previous period, or subtracted from the OBV value if price finished lower than the previous period. That OBV value will just keep on going up and up or down and down with no regard to any period input. Those are the two indicators and they are going to get us into trades somehow. We better check on that. The linear weighted moving average first. Simple filtering process. When price is above the average, it will be sell trades only for us, and so when price is below the moving average, it will be buy trades alone. Then for the OBV indicator, we're going to be diving into divergence. Bullish divergence holding a reference towards bulls will mean buy trades for us, and bearish divergence is the counter reference to that and will mean sell trades for us. If we do get an entry signal from those indicators, we'll just need to double check that the entry point is far enough extended away from the moving average. That means we'll use the average true range indicator to measure the distance from the moving average value on the period of entry to the entry price. If that distance is at least 2 times the ATR value, then we'll be into a trade with all of our entry criteria met. Just note that that's at least 2 times ATR value that I said, not exactly 2 times ATR value. If you're not familiar with the ATR indicator, there it goes, because we are moving on to getting specific about this divergence jobby. Still though, there's a pretty interesting video we have done on the ATR, which is going to be linked in the video description if I remembered to do that. What constitutes divergence for us though? For our bullish divergence, that's when price is under the moving average. We need to see that the price is down between 2 given periods, but that our on balance volume indicator is up between those 2 same periods. The OBV is not in agreement with the price action. Likewise in reverse, bearish divergence is when price is up between 2 chosen periods, but the OBV has said no and is actually down between those 2 same periods. Now we can't have divergence over something like 1 billion periods. That would be kind of insane, I imagine. The OBV, we know that it doesn't use any period inputs, so it doesn't give us a measuring stick to work with there. If we were using an indicator like say the relative strength index and we input it with 14 periods, then we could use 14 periods as our divergence measure. But to repeat one final time, there is no period input for the OBV. No period input for the OBV. So we will use a minimum of 4 periods and a maximum of 20 periods for establishing that divergence. And that is divergence. Let's take a look at a couple example trades. Up first, we've got a sell trade example. It's the difference between those 2 periods of price that we're looking at. We can see by the upward slant of the trend line that price has gone up between those 2 periods, which are 6 periods apart from one another. But when we look to the OBV for the difference between the same 2 periods, we notice that in fact, although price has continued upward, the OBV has actually moved downward. With price above the moving average, that's our bearish divergence for a sell trade. We've just got to confirm the entry price is more than 2 times the ATR value away from the moving average, which in this instance we are lucky enough that it is. So we're in, and there's certainly a bit of room for taking profit in the move. Buy trade example, these are our 2 periods. We're looking at 9 periods apart from one another, and price has moved downward between those 2 periods. But during the same time frame, the OBV has this very slight increase, and that is all we need to confirm our divergence. We've got bearish divergence, so finally again we just need to make sure the distance from the moving average to entry price is at least 2 times ATR value. It looks like it is, so we're in with a buy trade. That entry criteria is quite understandable, I would say, but we also better try and keep that money managed. It'll be the average true range indicator riding with us for this part of the strategy too. So there it was again, but how will we use it? First off, we're going to split our single trade entry into 2 sub-trades. Sub-trade A will use a 1 to 1.5 risk-reward ratio, so if we had the same amount of winning trades and losing trades, we'll end up with 50% extra profits, as if that's going to happen. Sub-trade B will then use a trailing stop loss and nothing more. It will start at the same position as sub-trade A, a 1 times ATR value back from our entry price, and will continue to trail at a value of 1 times the ATR. Maybe we'll be able to squeeze out some life-changing amounts of money for our demo account. We'll use a standard run-of-the-mill 2% capital risk per trade. Assuming I've done the math correctly, that's 1% capital risk per sub-trade. Shouldn't go broke from that. The last few bits for us before we jump on, it's going to be on the daily time frame, 1 day per candle, hopefully giving us some great consistency over price action. We'll be trading on the Forex major and minor pairs, all 28 of them. We'll run through them once a day at the end of the day, checking for the entry signals as the candles are about to close. We will be ignoring any overlapping currency correlation. Even if multiple assets trade very similarly to one another, we'll get in as many trades that give us a signal. So if all 7 of the Japanese yen currency pairs give us that entry signal, the OBV divergence, well, we'll get in on all 7 of those, assuming that we have the margin to proceed, that is. We better journal up on this one too, see if we can learn to achieve enlightenment through the practice of honest review. Righty reindeer, it is time to get onto those charts and start taking some trades. Okay, so here we're on the charts, just coming to the end of the day, around about 25 minutes until the close. And the Euro US dollar is pulled up as our example chart to get us going. Just to confirm what we're looking for, price is beneath the moving average, so we would be looking for the lowest close of the last 20 periods. It's going back to that candle there, but we're not seeing that. We've had lower closes on the previous 5 candles, so we're not going to be able to push ahead with divergence. But if we look at this candle here, this did stoop to a lowest low from 20 candles back from it and did give a strong divergence. I mean, look at it here on the OBV. That is a big difference, much higher OBV. Had we entered that signal there with a 1 to 1.5 ratio on our one trade, might have been able to take profit. Let's have a look. What was the ATR there? About 95 pips. So we'd be looking for about 140 thereabouts to take the profit. Oh, that's a bit close. That's a bit close on this candle. Don't think we would have got there. It's very easy to look at it and say that we would have done, but in practice, that's too close to call. Wouldn't have hit the stop loss either yet, so that's good. Be interesting to see how this one plays out. But that certainly would have been a signal right there. A lower close on price, higher close on the OBV. Overextended away from the average. So all we're going to do is check the other 27 currency pairs, see if they've got anything going on, and just pop a comment on for anything interesting. Won't be talking about all 28 of them because a lot of the information just won't be relevant. Many of these charts won't be giving any kind of signal or anywhere close to a signal. Not really expecting a divergent signal anytime soon. Got the feeling that we're going to have to be patient on this one, but let's roll through those charts, see what we got. Pound US dollar, we can see that's at a lower close, but the OBV is at a lower close as well. So price is there and it's away from the moving average enough, but not seeing that divergence to get us in. Same with the dollar yen, highest close over the last 20, but same for the OBV. No divergence. Swiss franc Japanese yen though, looks like we are getting a divergence signal here. Wasn't expecting that so soon. We can see that price over the last 20 periods, it is at the highest close of those 20 periods, and the OBV is a lower close than it was back here. Not sure if we want to jump straight into this trade yet. That divergence could grow bigger with another green day tomorrow in a low volume. We'll give it a go. We'll get in there, test out our strategy. If it does go and head straight towards the stop loss, we'll take a lesson from it and we'll try and be a little bit more patient with the divergence. Maybe wait for something a bit clearer. But let's give a pop for this one. Let's just make sure the price is away from the moving average. Yeah, plenty. About 600 pips there. And we'd only be looking for 2 times ATR. So that'd be about 228 pips. Pretty clear. Let's do the risk calculation. Okay, you can see the risk calculated on screen. We are going to be getting into 2 sub-trades. 1% risk each for those sub-trades, 2% total. That's $1,000 risk per sub-trade, starting at 100,000 US dollars. And we are going to be selling off the market. We'll give it a go. Let's get in there. Okay, so let's set a stop loss and take profit. Both trades going to have the same stop loss. That'll be 1,137 points. Just mirroring 1 times the ATR. So we'll set it for subtrade A and set it for subtrade B2. Let's lock that in. Subtrade A 1.5 times the stop loss to the take profits. That'll be 1,705 points. Set that down, see what it looks like. Yeah, that certainly seems achievable, especially since we can't see the stop loss. It's not going to be too far, but out of sight, out of mind. Let's hope for the reversal here, coming back to this take profit. And for subtrade B, I'm not going to set that take profit, but we are going to set a custom trading stop loss right here. 1 times ATR again, so 113 pips. And 7 pipettes. It won't trail immediately because we've got the stop loss set, so it will have to go 1 full times ATR value to the good before we see the trade and stop loss kick in. But if it does, oh the glory, oh the profits. Going to be watching this one closely, of course. Australian dollar, New Zealand dollar, that had a highest close on the last trading day on Friday, but the OBV was with it. There was no divergence there, so not a signal that we missed. So that is it for tonight. We've checked all 28 currency pairs. And more action than I thought, to be honest. Didn't expect to be getting in a trade straight away, but that is certainly welcomed. Blessings on the Swiss franc, Japanese yen. Now, because of course we are in the daily chart, we're not going to get another full candle until the end of tomorrow. So we will just sit here and wait it out for 24 hours until these candles are fully formed again and see how everything's looking then. Back tomorrow. Here we are, still on the charts 24 hours later, just as we promised. And at the moment, it does look like we've caught a bit of that divergence on the Swiss franc, Japanese yen trade we're in. Nice little retracement, putting us about $1,336 up for the minute. Of course, we cannot celebrate anything until we get a take profit, but nevertheless, a nice start. Good to see. No action needed on it, so all we're going to do is check our other 27 currency pairs, and we'll see what we got out there, see if there's anything interesting, any new trades at all. Pound US dollar sinks low, but of course the OBV goes with it. Almost that low on the New Zealand dollar, US dollar. It went up and turned on its tail, but still not quite at a low close. And now if it does go lower over the next day or two, very unlikely that we're going to get the OBV signal. Can't see us getting a solid divergence from that. Never mind. Similarly, on the US dollar Canadian dollar pair, we are seeing price push to a new high, the highest close of the last 20 periods. Yes, sir. But I would say the OBV is slightly higher than it has been previously. And even if it was technically slightly lower, ever slightly lower, I wouldn't be convinced by that for divergence. Let's move along. The euro's been making strong moves against a lot of these currency pairs. Good day for them. Aussie dollar, New Zealand dollar coming down. Maybe we get a couple more red days and then a push up. See some divergence in the future maybe. Could be building up over the next week or two. And that's it for tonight. No extra signals for us. We will stick with the Swiss franc, Japanese yen. See if this one will get us to the take profit. We can only hope. Let's come back another 24 hours, check those charts again, see what we got cooking. Back again midweek, and we were able to take profit on our Swiss franc Japanese yen trade. Very nice stuff, $1,500 near enough banked. We'll take that, and we can see the trading stop loss on our subtrade B is kicked in as well, so we're not going to lose money on it, but we may not make too much. Price has retreated, and we can see it looks like we might have gotten quite lucky here. We'll have to see what happens in the coming days, but let's look at it on the 30-minute chart. Yeah, we did take profit quite near the bottom. Price pushing back up nearly 0.5% since then. Can't complain though, we are in the money, and that's all that matters. Just over 20 minutes left until the end of the day, so let's check those other 27 currency pairs, see if any signals come through for us. Euro climbing against the dollar. We need to see a big drop off to try and get some of that divergence, but it is possible though, with the OBV being where it's at. Some terrible news for Europe might be a signal for us. US dollar climbs against the CAD. OBV now clearly above those peaks from previously, so no signal there, that's for sure. Pound Aussie, if it was closing near the low of the day, could have been a signal in there for us, but as is, no good. Got to get that price lower, and now if it does go, the OBV will likely go with it. We'll see what happens, obviously, but it doesn't look promising for a signal. But no extra signals for us tonight. Don't want to rush into anything. Got to be patient, and I do think these signals are going to be few and far between. Getting into this Swiss franc Japanese yen on day 1 and taking profit on day 3 does feel like a little bit of luck to our favour, which we'll certainly take, but it's not something to expect every single day. We'll be back again tomorrow. Day 4, and sadly our Swiss franc Japanese yen trade has moved back against us, and I really don't think we got enough out of the trailing stop loss, to be honest, because we took profit at 1.5 times ATR, but the trailing stop loss that was set at 1 times ATR, and it's barely moved past the entry price. That's the way it goes, I suppose. But anyway, let's hopefully not see any more green days like we have today. We want those red days to come back to us, some sharp red days. Nothing much to shout out. Did want to be quick on it because, as you can see, we are right near the end of the day. Didn't want to miss out on any trades, but none have come for us. That's okay. We'll try again tomorrow for the last day of the week. Day number 5 here. We come to the end of the week and we have lost our trade today. Price continued back against us. We didn't get a lot out of it, only around about $80 or so after you've taken off the swap or taken over a loss. But it does mean if the next trade we get in, if we lose on that one, then it will be more losses. It'll be about $2,000 worth of losses. We only gained just over $1,500 from this. Again, very happy with the win. Disappointed that we couldn't get a stronger trail going though. A real drop on price, something like we saw back here where it's gone for about 3 or 4%. That would have been the move we're looking for. Nevertheless, it ain't too bad. Let's check the other charts, see if we got anything new. The dollar continuing to climb against the Swiss franc. Been on a real big run against it, almost plus 5% over the last few weeks. And the pound continues to dip. Tough time for them. Nothing in the way of divergence for us. Close out the week. Not every day we get a divergence. And even if we do, it might just be a narrow divergence, something too slim that we're not quite comfortable getting into. Even though it worked out in the Swiss franc Japanese yen, we do want to be pretty real with our divergence. We'll be back on Monday to see if we can find any of those that we're looking for. So that is something for us to look forward to. But our one and only trade, a winner so far. More of the same, yes please.